Hi, welcome to Charts Chatter with Chatur Charts. In yesterday's session, we were trying to evaluate the overhang of the Fed rate hike meeting that was in progress. In fact, it's in progress as we speak now. And we were trying to gauge the volatility that could occur in the Indian markets in both the Nifty and Bank Nifty and the Sensex. And we're trying to see how volatile it could get. But as luck would have it, the RBI announcement this afternoon hiking the repo rate by 40 basis points and the CRR by 50 basis points to 4.5% has actually sucked out 87,000 crore of liquidity from the banking system. And as a result, the entire banking index crashed, thereby pulling down Nifty as well. So even without the Fed rate hike decision, which is yet to come, the indices have already collapsed today. So let's find out as to what happened today and how do the indices look as far as from a future perspective. So what we see here is Nifty Bank. So let's first find out from Nifty. So Nifty was already weak. If you notice that similar to the US 500 or the S&P 500 index, Nifty already was bearing signs of weakness due to the death cross that has occurred as early as 8th of April. So the 50-day moving average, simple moving average, has already dipped below the 200-day moving average, which is very ominous sign for indices. So Nifty could not sustain that weakness, and it was in the process of creating the right shoulder out of the head of shoulder formation, and it was actually waiting for a confirmation. Yesterday's morning star gave some sign of a hope for a reversal, and Nifty attempted a 17,400 zone recoup a day before yesterday as well, but that too got sold down. And today, the bearish engulfing candle was the confirmation for the head and shoulder breakdown. So if we were to measure the eventual uh, downside for this head and shoulder breakdown, it's about 968 points. And if we were to place it at the neckline level, so eventually 16,100 could get tested if Nifty closes below the support lines that are drawn on this chart on a daily closing basis. So eventually Nifty has to break 16,600 followed by 16,400. And if these two levels are taken out on a daily closing basis, it could eventually test 16,173. However, a reversal can occur as well, but Nifty will have to recoup the lost levels and show reversal patterns clearly emerging for this to happen. But as we speak now, Nifty is weak with all the indicators and oscillators turning into a sell mode. Similar is the situation with Bank Nifty. Identical head and shoulder pattern has also emerged in Bank Nifty. And similar to Nifty, there's also a cross of death in Bank Nifty as early as 31st of March. And this head and shoulder pattern has an overall potential for a downside of 3,000 points, a whopping 3,000 points. And if we were to place this on the neckline, the 3,000 point fall might eventually take it to levels around the 33,000 mark. Out of the 3,000 point fall, if we were to deduct the 700, 800 point fall that occurred today, there's still scope for another 2,200 point fall, provided Bank Nifty closes below 36,000 to begin with, and then 34,800, and eventually 33,900. But these levels will have to be watched for. There could be buying support that could occur at these stages. So one will have to really, go on the downside in a very, very progressive manner with stop losses and with the eye for any reversals that could occur. Um, so overall, there is weakness in the Indian markets, and Bank Nifty oscillators have also shown sell signals. So we will have to really wait and watch to see how it unfolds in the days to come. This session and all the narratives and observations are purely educational in nature and do not purport to be a trade recommendation. If you do like this video, please subscribe to Charts Chatter with Chatur Charts and pressing the like button. And do hope to see you in tomorrow's session. Thank you so much.